If you buy into the fact that investing is complicated, risky, not something that you could ever understand, you're being played.
Who the f*** am I to tell you what to do with your money?
My name is Priya Malani, ex-Merrill Lynch, ex-Wall Street, extremely type A, the kind of crazy you want in charge of your cash. Currently managing millions of hardworking dollars for hardworking, high-earning 30-somethings like yourself. Whatever phase you're in, financially free, fixing it,
Or feeling totally
my job is to teach you the stuff that no one else is going to. Enough foreplay. Take off the jeans, put on the sweats, grab a glass, and let's talk
money.
Welcome to the F word. Smart money.
No bull.
Hey guys, I'm really glad you're here. If you were thinking about skipping this episode because investing feels just a little reckless, we're going to set the record straight today. Because here's the truth. Investing done right is actually super straightforward. I know that might sound too good to be true, especially for those of you out there who maybe haven't started yet, but stick with me because the truth is that despite how simple and straightforward it actually is, get this, most people are actually doing it wrong. So let's start with what investing is not. Investing is not gambling. Investing is not a get-rich-quick scheme. And I only bring this one up because I've heard it enough to know that people think it. Investing is not a way to double your money in time for your wedding next year. If you're chasing quick wins, you're not thinking about investing. You're thinking about gambling. Two completely different things. Yet, because of all the noise, most of us lump investing into the same pile as gambling. We think it's risky and stupid. Unfortunately, that narrative is only hurting you. It's keeping you away from investing, and it might just be creating fear where there doesn't need to be any. So let's start with why are so many people confused about what investing actually is? Why do we think of investing so closely aligned with gambling? The good news, it's not your fault. It's because Wall Street has done a capital S shitty job of explaining what investing actually is. And, fun fact, that's not by accident. The more complicated investing seems, the more power, control, and fees stay in Wall Street's hands. If they can convince you that investing is too complex to do on your own, you'll gladly pay them to do it for you. If you buy into the fact that investing is complicated, risky, not something that you could ever understand, you're being played. You're letting them win. Now, a lot of people think they know what investing looks like. They picture some ultra-wealthy guy, let's call him Chad, standing at a private cocktail party in a Manhattan penthouse, swirling his, overpriced Negroni, while casually talking to a hedge fund manager. Chad acts like, oh, I understand. I'm nodding, I'm listening, I'm smirking. And he says to the hedge fund manager, all right, let's see what you can do with my money. By the time dessert is served, he's already decided he'll wire $1 million over first thing Monday morning. And if the hedge fund guy delivers, maybe he'll send more. That's not investing. That's gambling with the Negroni in your hand. And yet, people look at those guys and think, oh, those are serious investors. That's where real investing happens. I need to get in on that. Wrong. Because real investing isn't about seeing what happens. It's not about placing a bet and hoping you pick a winner. It's not about handing your money over to a hedge fund manager, crossing your fingers and hoping you can trust him. Hashtag Madoff. And it's definitely not about testing the waters before going all in. I hear people say, I'm just investing a little. I'm just testing the waters. That's not a thing. That's what you do in Vegas, test the waters, right before your confidence builds, right before you lose your shirt. Again, testing the waters when it comes to investing, that's not a thing. That's gambling. Investing, on the other hand, is a system, a process. It's a long-term game where the rules don't change just because you have more money, right? The fundamental rules don't change when you go from high earner to really wealthy. Sure, when you're really wealthy, do you have more money laying around and maybe you do want to gamble with some of it? Yeah, maybe. But otherwise, the fundamental rules of investing are the same for everyone. The people who actually build wealth through investing aren't making one-off bets. They're playing the long game. If you're still holding on to this, like, let me start with a little and see what happens mentality, you have to let that go. Because real investors don't test the market. They own the market. Okay, now what's worse, the very people who are supposed to help the average person get started with investing, let's call them traditional financial advisors, are making a huge mistake in how they teach you to invest. Instead of showing you a simple strategy that works, they push complex strategies, stock picking, active management, which, by the way, comes with high fees and usually underperforms the market. So now that we've sort of cleared up what investing isn't, let's talk about the biggest mistake most people make when they try to invest. The biggest mistake is thinking you're only winning if you're outperforming the market. People believe they need to time their moves, pick the right stocks, follow market trends, react to financial news. They kind of convince themselves that there's some sort of secret they just haven't unlocked. One that will let them buy low, sell high, kind of finally crack the code to getting ahead. Here's the truth. The more you mess with your investments, the worse off you are. In other words, don't listen to the news. And study after study proves this. The investor who constantly buy, sell, tweak, react, almost always underperform the ones who just leave their investments alone. And I've got a good story to tell you so you don't have to take my word for it. A few years back, the big financial institution that we all know, Fidelity, analyzed all the different types of accounts they manage, brokerage accounts, retirement accounts, employer-sponsored plans, you name it. They wanted to find out which accounts had the best performance. And what they found was incredibly fascinating. The best performing accounts weren't managed by expert investors. They weren't even managed at all. The best performing accounts were 401ks. Want to know why? Because most people forget their passwords. I kid you not. People who literally couldn't log in to check their balances outperformed the people who were able to log in and check. Because the single most effective thing you can do for your investments is leave them the hell alone. And if that sounds crazy, let me tell you about someone we all know very well who bet $1 million on this exact idea and won. Big flex. In 2007, Warren Buffett made $1 million bet. He wagered that a boring, hands-off S&P 500 index fund would outperform hedge fund managers over 10 years. He gave them a decade. Now, keep in mind, hedge fund managers are some of the smartest minds in finance. They use complex strategies, high-frequency trading, every advantage possible. And yet, Warren Buffett won. The index he picked returned 7.1% per year, while the hedge funds averaged just around 2.2%. Like a total embarrassment. The lesson is that even experts can't consistently beat the market. And if they can't do it, why do you think you can? I know at this point, some of you might be thinking like, okay, I get it. Don't overthink it. Don't try to outperform. So if investing isn't gambling and it's not stock picking and it's not handing my money over to some finance bro, then what exactly is it? And here's your answer. Investing is the process of owning assets that grow over time, not overnight. Investing is owning a small piece of the companies that power the world and then leaving them alone. It's not about chasing winners. It's about owning the market. It's not about reacting to news. It's about consistency. That's it. It's not complicated. And frankly, it's not that exciting, which is why I think most people tend to ignore proper investing. Most of the time, it doesn't even feel like it's working. Now, some of you might be nodding along like, yeah, I get it. But then you turn around and say things like, I'm waiting on the sidelines until the time is right. I don't want to invest too much. I'll just start small and add more if it does well. I don't have time, so I'm thinking about hiring someone to actively manage my portfolio. I'll just invest in insert whatever hot stock everyone's talking about and see what happens. If you've said or thought any of these things, you still don't get it. Investing isn't about timing, testing, or betting. It's simply about owning. The stock market goes up over time. Not every day, not every month, sometimes not even every year. But historically, over decades, it has always increased in value. That's why the people who just set it and forget it are the ones who actually build wealth. Because for better or worse, the stock market doesn't reward the smartest person in the room. It rewards the most patient person. So if patience is the key, right, how do you actually get started? I'm going to give you the only strategy you need. You ready for it? Own the market and don't tinker. Now, I know some of you are still waiting for the catch. Like, okay, I hear you. I get it. I don't need to time the market. Shouldn't try to beat it. But what am I actually supposed to do? So here it is, step by step. Step 1, invest in a series of broad, low-cost index funds. This isn't about trying to pick the next Amazon. It's about owning every company that makes up the economy and letting the best ones naturally rise to the top. Step 2, automate your contributions and forget about it. Set up auto investing so you don't have to think about it. Just like those 401k accounts that outperformed everyone else, automation forces you to stay consistent, and consistency wins. Step 3, stay in the market no matter what. The only way you lose, pulling out when the market drops. The market is built to recover. Your job is to stay put. That's it. No picking stocks, no obsessing over news cycles, no playing it safe on the sidelines. Because here's the thing, and I keep hitting this home, the less you do, the better you'll perform. All right, there's obviously a lot more to talk about when it comes to investing, but here's what I really want you to take away from today. If you're looking for the best investment performance, it usually goes to the investors who literally forget they're investing. That's how little you should be messing with your money once it's in the market. And yeah, you're going to hear stories, right? Your friend who bought a stock and made it big, or the guy who got into Tesla early, the crypto bro who swears he's cracked the code. That's called survivorship bias. For every stock someone brags about making money on, there are at least 12 others they tanked on they'll never bring up. You only hear the wins, never the losses. And guess what? Those big wins, that's not a strategy. That's just lucky bets. So don't get caught up in that hype. Just get started. And if you're thinking, okay, but what about, don't worry, I've got you. In upcoming episodes, I'm going to tackle everything from how to make sure you're properly diversified without obviously overcomplicating it. What even is the S&P 500 and what else should you own? How to start investing when you're still paying off debt, because yes, you can do both. How to invest for long-term goals versus near-term goals, because your approach should change depending on the timeline. And really whatever else is on your mind. If you have questions after this episode, find me, DM me, let me know. I'll make sure to cover them. But for now, just start. Automate, leave it alone, and watch what happens. That's how you build wealth. And now you know. See you next time.
Thanks for listening to The F Word with Priya Malani. If you like what you heard, hit subscribe wherever you're listening and leave us a review while you're at it. We're approval junkies. Don't forget, you can find a ton of great resources, content, courses, and other freebies at stashwealth.com. Now, for the capital S stuff our lawyers want us to say. Stash Wealth is a registered investment advisor. Content presented is for informational and educational purposes only and is not intended to make an offer or solicitation for any specific securities, product, service, or strategy. Consult with a qualified investment advisor, that's us, before implementing any strategy. Investing involves risk, including the loss of principal. Past performance does not guarantee future results. There, we said it.
Did I have that up?